So I want to make one thing very clear right off the bat. It's impossible for anyone to accurately predict market tops. But what we can do is look at history, look at facts, look at data to kind of guesstimate, hey, are we close to a market top? Is there a probability that we could see a correction in the near future? And I think the answer to those questions is probably a yes, and I'm going to explain exactly why in this video. Now, there are some smart people in this world. Elon Musk, Satya Nadella are two people that I think fit into that category, and they run two of the most successful, largest businesses in the world, Tesla and Microsoft. Now, the interesting thing is that both of them have made moves in the market recently which could signal a market top, and that's what we're discussing in this video. Now, what's interesting is that back in 2018, for those of us that were invested, we know that the S&P 500 corrected about 20% in late 2018, and Satya Nadella actually made a similar move in mid-2018, pretty much right before we saw this correction. So the question here is history going to repeat itself? Now, all of this speculation, these thoughts kind of surfaced a few weeks ago when we got this big tweet from Elon Musk. He tweeted asking if he should sell 10% of his Tesla stock, and it was framed around taxes and unrealized gains on his stock. Elon asked in a poll if he should sell some of his Tesla, and the majority voted yes, and he said that he would follow the results of the poll. Now, since then, Elon has been selling Tesla fairly regularly and in sizable chunks, and the most recent sale was around $1.05 billion, and to date, he sold about $10 billion worth of Tesla stock. The end goal for him for 10% would be around $20 billion, so he's about halfway there. Now, selling shares as a major owner, shareholder of a company, sometimes it could be seen as a red flag, but not always. You can't just draw a conclusion based solely on that. But when you consider other factors out there going on in the world, some other metrics to look at, the timing of this is a little suspicious. Earlier this month, the Fed started tapering bond purchases, as you guys may have heard, and they started scaling back their direct support here for the markets, and so far the market is throwing a tantrum. It's not liking this. As you can see, since November, the market has essentially been topping a bit here. It started moving sideways, and now it's selling off aggressively most recently. There's also new reports coming out that the Fed plans to accelerate their tapering process starting in January, according to Goldman Sachs, and this just adds more turbulence, more fuel to the fire to an already shaky market. Now, if you're heavily invested in high growth stocks or even have some exposure to high growth stocks, you have seen the pain in these companies over the last month and a half or so. A lot of these companies are down 20, 30, 40, 50% plus from their highs, and I believe that's a direct result of what the Fed is doing currently. Typically, when you get monetary policy kind of tightening and the Fed tapering and fears of interest rates next year, high growth companies that aren't profitable yet and have their profits way out in the future, are the first to get hit. But now, before we tie everything together here in this video, let's talk about Satya Nadella, because he also made some big moves with his Microsoft shares. Just a couple days ago, we got reports that he disclosed the sale of 839,000 shares of Microsoft, and these shares were sold over a couple of days for prices ranging from $334 per share to around $349 per share. What's interesting is that this brings Satya's position down by about 50%, because now he only, quote unquote, has 831,000 shares remaining that he owns. So Satya obviously still has a good amount of shares that he owns personally, and he sold some off, about half of it. So what? Does that really matter? Well, interestingly, if we go back to mid-2018, we see that he did something very similar back then. He sold around 30% of his stake in Microsoft, which was a significant amount, and this just so happens to be right before we entered that swift 20% correction in the S&P. What's also more interesting, guys, is that back in 2018, when he made the sale, we had very similar conditions in the market where the Fed was starting to tighten and things weren't as rosy as they were back in 2017. So it's very similar to now in 2021 when things weren't as rosy as they were back in 2020. In 2018, the Fed was tightening monetary policies, and this, like we mentioned, reduces liquidity in the market, and this makes it harder to borrow money. So companies with higher debt or poor balance sheets are most at risk. But once they sell off, it usually pulls down the other companies as well, resulting in a broader market correction or crash. So essentially, in summary, what we had in 2018 was the Fed tightening, and we had Satya Nadella selling 30% of his Microsoft shares. Maybe that was coincidental, maybe not. Now here in 2021, we have the Fed tightening, and we have Satya Nadella selling 50% of his Microsoft shares. Maybe it's coincidence again, maybe not. This time, to add fuel to the fire, we also have Elon Musk selling 10% of his shares in Tesla. So again, could just be a coincidence, but maybe not. The thing is, in my opinion, I think these people have a good amount of, smart brains around them to tell them, hey, take some risk off the table. Markets are at highs. Historically, we've seen when the Fed tightens, we do get some turbulence in the market, so take some off the table. That's probably why both of them are selling, but I can't confirm that for sure. It's just my speculation. But here's the thing. You have to understand that this is just all speculation, all guesswork, because we don't know for sure the market's actually topping off. This is just a temporary dip and we're going to start rallying higher. For all we know, we could make new highs before the end of the year, a Santa Claus rally. So, it's kind of impossible to predict market tops like I opened with. But what we can do, like I said, is look at history, look at what's happened in the past, look at moves that these smart people have made in the past, and just learn from that. And in my opinion, I think that we're setting up here for a correction, which is good, guys. It's not a bad thing. It's a good thing because that pulls us down, gives us good prices to buy great companies at. And I think over time, we will recover. And if history tells us anything, we will make new all-time highs. Corrections are normal. It's just part of the cycle. We haven't had a big one in a little while here. So it is coming. Who knows if it's coming here in the next few weeks or months. Maybe it's in the next year or two. But it is coming. It will hit us at some point. And with everything happening in the market right now, the Fed and fears and slowdowns and inflation and all this other stuff, things are pointing towards a correction sooner rather than later. But anyways, guys, that's just my opinion. That's just what I want to present to you today. If this was valuable, let me know in the comments down below. I can make more videos like this in the future. But anyways, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.